Never apologize for a price increase. Talk about all the value you've added. Talk about the value that you've given them. Talk about how things are changing, when they're going to change, and what it means for them. What do they have to do today? That's it. Be very, very clear with it. But the biggest one is don't apologize.
You're listening to the B2B Revenue Executive Experience, a podcast dedicated to helping executives train their sales and marketing teams to optimize growth. Whether you're looking for techniques and strategies or tools and resources, you've come to the right place. Let's accelerate your growth in 3, 2, 1.
Hello, everyone, and welcome to the B2B Revenue Executive Experience. I'm your host, Cory, and today I'm excited to talk to Bill Wilson. He's the founder and CEO of Pace Pricing, a consulting and coaching firm specializing in pricing strategies for B2B SaaS companies. He's a 3-time founder with more than 20 years of experience in entrepreneurship, consulting, and SaaS. Bill has celebrated 3 successful exits, guiding companies at every growth stage, and has become a trusted advisor and coach to hundreds of SaaS teams, partnering with accelerators, PE, and pricing firms. He's also an avid podcaster, and his most recent appearances are 135 Secrets to Successful Product Pricing and How to Revolutionize SaaS Growth, Master Pricing Strategy Now. Bill, welcome to the show.
Thanks so much. I'm stoked to be here.
Yeah, I'm excited to get into this. I think it's something that, we don't hear a lot about, or at least I don't hear a lot about in our space until it's, kind of a behind the scenes conversation and tactical when it needs to happen. So I'm excited to dig into the strategy behind it.
Yeah. Awesome. Me too.
But first, let us, get to know you a little bit better. So you've had an impressive path, obviously 3-time founder and now CEO of Pace Pricing. What initially drew you to this world?
It's funny. I fell into it really. I'm actually a software developer. That's where I come from. So I've been writing code since the 90s, and I founded my first company in 2007, which was a company focused on mobile design and development. And we did that for a number of years. But during that process, we had built some tools to help sell our product, and we sold productized service. I've always been kind of a product guy. So I was like, I don't want to sell anything by the hour. So let's sell productized services. And so we were selling productized services at the time. And we come up with a tool to actually help quote for our customers. And we took a page out of the SaaS playbook, B2B SaaS, where they have sort of the good, better, best. And so we had built a good, better, best offering for our productized service. We could spin up a web page really quickly and send it to our prospect, and they could pick what they want. They could push a button. And I think at the time it was like a HubSpot form that would come up and they could fill in their information, and then we'd get started. And, but at the time we were selling to tons and tons of B2B SaaS companies. We were building their companion apps. And every time we talked to one, they would ask, where did you get this tool? This is pretty fascinating. We'd love to have this for our inside sales teams. And I was like, it's just something we built in-house, right? And this is kind of the curse of being software developers. This is you build tools and they're just part of your workflow and you don't think much of it. But other people started to really sort of show that they had some value around this. And so with enough prodding from my head of sales at the time, Taylor Bond, who's absolutely fantastic, he and I founded a company called SalesRate, which was to actually take that technology to market. And so we built SalesRate. It was this interactive quoting tool for B2B SaaS. So you could basically model your entire pricing structure in this tool and present it on demos and calls, and it would all be custom pricing and configured for an individual sales rep. So it was really cool. I really loved it. But it required that I went deep on pricing, right? I had to understand so much of what was actually happening mechanically behind the scenes with pricing models and how the sales teams were actually working with it. What they were doing with the models they had. And inevitably this led to, I was doing a lot of founder-led sales. So I'm on the call all the time with revenue leaders, and they would always ask me sort of almost in a hushed tone, they'd be like, so what do you think of our pricing? That kind of thing. You see lots of pricing. What do you think of our pricing? And I came to realize that the state of pricing was a bit messy, and there was a lot of confusion, and people didn't really, I always found sometimes the sales teams didn't understand the pricing themselves and they couldn't actually do it, or there was parts of it that they couldn't articulate. So they just never sold it. And so I realized that there was a lot of sort of things happening inside, at least the sales org, around pricing and how they felt about it. And as a tool mostly to get the deal done, as opposed to the driver that it could be. And that's sort of what drew me to it. It was this, since it was sort of one of these things that people had a lot of sort of, I don't want to call it, anxiety around, I guess is the right thing. That's when I started going, okay, there's more here. And I actually ran my first pricing engagement while I was still running the startup. And so once we were acquired in 2020, and thank you, COVID. Probably the only good thing that came out of COVID for me was being acquired. So we were acquired by a California-based company, and I stayed with them for a few months. But then I decided that I wanted to continue on with this pricing work, and that's when I decided to build Pace Pricing. And it's been incredible to watch the industry come alive, especially over the last few months. There's so much more talk about pricing as AI becomes much more mainstream and people try and figure out how to package and sell that. And so it's been really, really fascinating over the last few years to dig into this space and help so many founders. It's been fascinating. So that's a long answer to how did I get into pricing?
Hey, no, that's a great story. And I'm curious. So, at 2020, that company is acquired, and then you spend a little bit of time there, but you decide, no, it's time to go back out again. So between then and now, obviously AI has thrown a wrench into things, but what are some of the other big shifts you've seen at, working at Pace Pricing and founding that?
Yeah, I mean, I think the biggest shift, at least I'm trying to push, that I want to see in companies is that pricing becomes an integral part of their process, just like product, just like CS, just like support, just like all the other 6, departments inside a SaaS company. I want pricing to be at least a functional department where people are thinking about it all the time. And so the shift I've seen is that pricing, especially during COVID and, since, there's been a lot of shifts of people actually paying attention to it more internally. A lot of founders, a lot of teams will set their pricing. But when I mean pricing, I don't necessarily mean the price point, right? Because that's only part of it. It's really about, it's not so much, what you charge, it's how you charge. And so the structures of pricing has really started to change and be embraced. So everything from, there was usage, usage was the mantra for a while, but it has to go usage based. And then it's like, that didn't come true. PLG is the way we have to go. Everything has to be PLG. That didn't come true. But what has come true is a hybrid of all of that, right? Those are all effective ways to solve problems in B2B SaaS. And you just have to employ the right tool at the right time. And so for me, the biggest shift I've seen, or at least the one like I said, I'm pushing is 1, get it into the teams so that they're thinking about it all the time. But 2 is start moving into more hybrid models such that you can actually get to a really great NRR. And you're not just stuck with a unidimensional model. Even if you do have feature gating across packages, I just want people to get outside of this idea of we only sell 1 unit and get into a bit more of a 2-dimensional model to help them scale. So that's the big change that I've seen and also try and push.
Yeah, I think it makes a lot of sense, right? Like product-led growth works until it doesn't. Everyone was switching to a credit model. Now some people are retreating backward. But when you look at all of that, and if I heard you correctly, you're advocating for more of a hybrid approach. Is there one common mistake that you see SaaS companies making when it comes to that structure?
Well, with that structure specifically, I mean, the fact that they're not doing it, I guess, is probably the big one. But the overall biggest mistake that teams make in pricing is that they don't change it. Like that's the absolute biggest mistake, because they'll set it, they'll get their model, they'll do it, it starts to work, and then all of a sudden they feel like they can't touch it. And so I think that's probably the biggest mistake. And so then things change, tides shift. We've got tons and tons of people shedding headcount again. And if you're selling per seat and you're a B2B SaaS company selling to B2B SaaS, all you've built is a downward spiral, right? Because they cut headcount, that you lose revenue, you cut headcount, and so on and so on. And that, building a barometer for the market is not exactly what I would say is probably the most scalable way to do it, because it's also the most expensive thing that companies can add to their business is a person. And oftentimes paying for access, which is kind of what per user pricing is, isn't necessarily where the value is. And I think that's the big shift that, people are still making the mistake of like, per user is the way. And I think, and I'm not one of these people saying that, per user is dead. I'm saying per user and if you have to, or how do users fit into it? How can they help scale the size of the deal? Things like that. So I think those are some of the mistakes that people make is this, it's all or nothing approach. And I think that's the big thing.
Would you say that it's primarily because people treat it as a tactical function instead of treat it strategically? And If so, what do you see as the big barriers to a strategic pricing and structure model and function within an org?
I think, yeah. I mean, I think definitely it's part of the problem is that people think it is like you said, like even a back office kind of back end kind of thing. It's like, hey, we built this amazing product and now, oh yeah, like how should we price this? Now, I know that's a bit of a contrived situation, but it's similar to that, right? I mean, I've done it. I've built product and gone, oh, okay, I guess we need to figure out how to price this thing. And then you choose a way and then you realize your software can't support it. And you're like, oh, okay, can't quite do that. It's too complicated. And you just get into making these unnatural decisions. Whereas if you just thought about it ahead of time in a strategic way and almost start with the model, how can we capture value in the market? So if we're going to go build something, how do we capture the value? Where is the value? And if we can go down that value chain to really understand where the value is, that's actually going to impact how we build our products. So I have a saying, which is product is pricing and pricing is product. And the two of them shall never be separated because you can't. Like you have to think about pricing or monetization, I should say, pricing as product is just catchier. But you really have to think about the monetization piece early, so I think that's the big barrier.
So, going back to these companies that are on the same page, right? Maybe they're sitting down and thinking, okay, we want to think about this strategically. We don't want to build it and then think, oh, what price tag do we slap on the side of this thing, right? What are the initial steps that they should be taking?
Yeah, I think there's two big pieces that come to it if you want to think about it strategically. It's going to be, what are we actually trying to accomplish for our customer, right? And so I like using jobs to be done type framework, which is probably going to be in your product organization somewhere or some form of it. Like really understanding what the job to be done is and also understanding the metric by which we should charge. And if we can figure out those two things, then a lot of the other pieces get a lot easier. And so at that time, you can really start to structure packaging around these jobs to be done such that it does scale organically. It is strategic. It is part of the actual growth of the business. It's like, no, like this is the progression customers are going to take. I talk to a lot of founders where they'll sit down with their teams and they'll go, okay, cool. What should we put in this basic package? And that's where the discussion starts, right? And they'll adopt a good, better, best. And they'll go, okay, cool. What do they need to get started? And, I think sometimes it's the wrong question. I think the question should be, first of all, who is it we're selling to, right? And what job are they trying to do without us, right? Because if there's no demand, that first entry level offer is just not going to work, right? Because if people aren't out there looking to hire someone for that job or hire a piece of technology for that job or get it done in some other way that they're willing to shed money for, then there's not a lot of value in that. So strategically, you need to think about those things in such a way that you can get that initial offering right and solve that core job to be done. And then you can start to play with things like, okay, what are the value drivers into the next plan? What's the next job to be done that they have to do? So from my perspective, from a strategy perspective, I guess, lining it up with your goals. Where do we want to be in the market, right? There's a couple of places you can play in the market. I don't advocate for copying your competitors anything, but, and especially pricing. And so what I use competitive information for is to understand where the market is and understand what the bottom and the top of that envelope is in terms of price points and structure. Because you kind of have to pick a lane strategically. You have to look at, you can either be the premium offering or you can be the budget offering. And if you can hold one of those two spots, like strategically, it's great, right? Because, you're selling lots and doing things and you're the budget version of this thing and you've built it in such a way that it can scale that way and you've decided that's where you want to be, or you're the premium offering and you're full white glove all the way and you just make it perfect. And, that's where you live. Now playing in the middle can get messy because there's a lot of other people in the middle. And it's like, how do you differentiate? So strategically, pricing can really help with that. The three levers I think strategically that founders should think about is when they think about monetization is, how can it help retention? How can it help expansion? And how can it help acquisition? Because those are the only three levers we have. Honestly, that's all we can really change. How long we keep a customer, how we acquire the customer, what else can we sell them? That's it.
Yeah, time to get back to basics sometimes, looking at those three for sure. So I'm curious, what would you say to companies that are, maybe entrenched in that middle tier? Are there ways that they can make that work with their pricing strategy, or would you counsel them to either, like you said, go budget and change their model, or try to go white glove, high end, either into the sort of spectrum there?
Yeah. I mean, it really depends on how red that ocean is, so I think it really comes down to niching down, if you haven't already, being super broad in really red ocean markets is often why they are red ocean, is because they're, barrier to entry is low. We can sell to everybody, which basically kind of means you're not really selling to anyone. And so it's, or at least you're not talking to anyone. You're talking to everyone and assuming everybody's got similar problems, or you have to talk about all the problems, and then it gets really confusing. And so that's usually what I advise is like, what can we do from a positioning perspective to position the offer and the company in a slightly different way that points at a different market? And that's kind of the third P of the whole, pricing is product. It's pricing is product is positioning, because they all go hand in hand. And we often get into engagements where there's a ton of product work that comes out of it and a ton of positioning work that comes out of it, because we've torn down the model to the studs. We've done tons and tons of research with their customer group. We've really understood where their pains are, and we extract those jobs to be done, and we extract the things that they're actually trying to achieve. And sometimes that can have real big impact on those companies.
Makes a lot of sense.
And oftentimes, man, I tell you, the other thing is that we'll start having these conversations, and sometimes you get everybody in the room. You got sales, you've got execs, you've got, revenue, you've got product, the whole group, marketing, everybody. Sometimes it's the first time they've all sat down together and talked about pricing. And that's, I'm surprised, but not shocked. Does that, does that help? And so sometimes they'll get in that room and they'll have that conversation, and that is enough to spur them into action and go, okay, cool, we need to change something. I had a conversation earlier this year with a big, I think they're around $20 million company in the specialized space. And it was kind of a free thing I had offered through a talk I gave, and they took me up on it. It was like perfect. And so it was like 10 people on the call, and we get into this situation. And at the end of the call, I said, hey, was that helpful? Was that useful? And the head of strategy there said, he goes, I came into this call thinking this is a waste of time. We don't have a problem with pricing. And he goes, now I'm leaving going, man, do we ever have a problem with pricing? And so it was really funny to see that switch. So, anyway, just a fun anecdote.
I bet, though. It's a good story. And like you said, I've seen the same thing play out, and it is surprising and not shocking at the same time. It's almost like, I don't know, I don't want to call it a shame around it, but it's almost a thing of like, everyone feels responsible in a way, but they maybe don't know what to do about it. And so it just becomes something that people tend to exist with instead of actually diving into, it seems.
Yeah. Honestly, I think it comes like there's a lot of anxiety around pricing. Once you have it and it's working and it's doing stuff, like it almost feels like the thing that made it work. People don't want to tinker with that little, there's a thread that connects us to our customers, and it's the how we capture value, right? So that commercial relationship between us and our customer, we don't want to start messing with. And I think that, and everybody kind of goes hot potato, I don't have enough. And that's why it's really a function inside the business. And it really needs to be, a lot of people are responsible, but not accountable. And I think that's really what it comes down to, is that you got to have some level of accountability. And I think like one of the easiest ways to get started with pricing and figuring out where you are is just get everybody in a room and start talking about pricing.
Yeah.
Like just start talking about it. That's probably the easiest way to get started.
Yeah, because to your point, no one wants to do it alone, right? Revenue executives are fighting for budget, even in the most collaborative environments. No one wants to be the person that's like, oh, I'm going to take on this and be responsible for changing this and maybe angering our customer base or maybe losing us some market share.
Oh, absolutely. And it sits at the intersection of all that stuff, right? Marketing is affected, sales is affected, CS is affected, support, everything is impacted by a pricing decision. And so, that's probably one of the reasons why it kind of goes, it's working. Let's not break it. But there are signals that it's time. So,
yeah. So let's change gears a little bit, and let's say that a company has gotten that signal. I was shocked and surprised by a stat you shared, which said that 98% of companies that even have a slight tweak to their pricing model will see positive results. What are the drivers behind even a small change like that?
Well, it's honestly, it's just the math of it, right? So we can pour money into lots of initiatives to grow top line revenue, right? So, and they're usually really expensive to do. Like customer acquisition cost is going to go up, all those types of things. But if you haven't raised your prices in, say, I don't know, a year, 2 years, if you added 15% to all of your prices today, that is just going to drop to the bottom line because nothing else has changed. Your conversion's likely not going to change. Your retention's likely not going to change. And if it changes, it's going to be very nominal. Like it's not going to be a ton. And you've just added 15% to your prices. And so like, that's the simplest explanation I have for that is it's like, if you keep your packaging just the way it is and just increased your prices, you would see a pretty large impact on the bottom line after 12 months, especially almost immediately too. Right. So, then the real trick though is bringing everybody else that's on old pricing to the new pricing. And if you keep that part of your regular routine inside the business, customers will grow to expect it. They understand it, and it drives you to keep aligned with your customer and how they get value. And so all the things that you're adding all the time are all focused around how do we keep adding value to this customer? How do we capture that value? And so it just becomes a really great cycle. Now, sometimes you see people complain about it. I think, pricing actually made it onto, the Oscars this year. They talked about how Netflix like changed their price 17 times or something. And, so there are limits to this, but yeah, I mean, I think in a regular routine way of changing your pricing, small increments are going to be a lot easier to take than massive, large shifts when you've waited for 3, 4, 5 years. And all of a sudden you have customers that are facing 50% increases because you have changed your prices a couple of times, but you never bothered bringing your existing customers with you. And so that's how it can have a mess. So that's a little bit harder. That's a bit more work, but it is all internal work and it can be run by internal teams. Largely, you don't need to add headcount to do it. And it can have meaningful results on the bottom line.
Yeah, for sure. And diving into the customer experience aspect of that a little bit more, how would you recommend companies best go about that if they are eyeing a 15% increase, even if they're eyeing just a 9% increase, which seems very popular these days, kind of year over year?
Yeah, I like to segment customers into groups based on where they are in our ecosystem. So you can do that based on the percentage of impact that it's going to be, because we're talking about existing customers, right? Yeah. So I would look at the percentage of impact that it's going to be, combine that with the monetary impact as well, because sometimes a high percentage impact can also just be a few dollars depending on the type of product it is, right? So sometimes it's not really going to be material. Even if it is a 50% increase, sometimes it's not actually material. And so I would segment the customers into those groups based on biggest impact, especially if you haven't changed prices in a while. And so build those cohorts of customers. And for anybody that's less than 15% or less, I would start with 10% of that cohort, and I would send a price increase email. Right, I would just send it out and see what happens. Basically, measure. And so there's a few principles to these sort of communications that you have to do, but largely it's centered around make sure you're making it about the customer, not you. Never apologize for a price increase. Talk about all the value you've added. Talk about the value that you've given them. Talk about how things are changing, when they're going to change, and what it means for them. What do they have to do today? That's it. Be very, very clear with it. But the biggest one is don't apologize. I was on a call the other day and someone said, well, should we put in the email that, hey, just so you guys know, we've never changed our prices in 6 years. I'm like, no, it has nothing to do with the customer and everything to do with you and your guilt or your fear. And so keep that out of it. So I think, take 10% of each of those cohorts and run whatever playbook it is you're going to run to move them forward. So the bigger ones, oftentimes you need to incentivize the move, right? So bigger, especially if someone's been with you for a few years and say they're getting a 30% increase, 40% increase, something like that, is that you can recognize that and say, hey, thank you very much for being loyal. Here's what the new pricing looks like. But for you this year, we're only going to do half that increase, and then we'll do the other half an increase next year. And oftentimes that can soften the blow and show that you're valuing the relationship. But there's lots of other types of incentives. You can offer add-ons for free. You can, if they're on monthly, you can get them to lock into an annual contract, That's a way to look, you can save 20% if you log into an annual contract. You've been with us for 3 years, you might as well. Right. And so that's how I, take each 10% of each of those cohorts, run the playbooks with your CS team, get the results, look at what churn looks like, because you're going to have some people are just going to go, oh, I forgot I was paying for this thing, I'm out. Or, well, that's impossible. I can't possibly pay you 10% more. And they're just, adamant that they can't do it. So sometimes they'll churn. But if you do that right, my experience is that customers they will accept the price change, and churn will be nominal. And you've now ripped a Band-Aid off, and it's going to feel really, really good because now everybody's on current pricing. On your top customers that might be really big and you've done custom deals for already, you may have to continue to do some of that stuff. But if you're changing models at all, one of the most important things is get them to the new model, and you can deal with price over time.
So on the flip side of things, Bill, when you have a company that has, really have a product they love and they've gone out strong, but things are starting to peter off and they want to actually reduce pricing, is there a good way that they can do that allows them to capture a little bit more market share and also keep their, current customers happy and feel like they didn't overpay?
Yeah, I think probably it would probably be introducing something new, introducing maybe a lower tier, maybe, some kind of easier entry into the product. So a couple of things happen there. So there could be in a situation where they went out strong and people were getting into the product and they loved it, and retention is good, right? Like people are sticking with it. So there's not really a value disconnect. So there's an acquisition problem, right? So it's really about driving people in the front door. So there's lots of different ways to handle acquisition problems, but some of those ways are, how do we make sure that entry level is providing enough value, and getting them to the aha moment they need to get to. On the flip side of that is that you could have went in strong and you could have had a lot of people sign up and do the thing, and then retention is starting to suffer. And really what that says is there's a value disconnect. So at the beginning, they saw the value, they were either getting the value or they saw the value and it was worth it to them. But something has changed either with your product, with the way you deliver it, or with the market to basically signal that this is no longer as valuable, and I think that's a different story. And that's when you need to start to think about, okay, where's the value disconnect with our product? And I come back to what we talked about earlier, jobs to be done. What are they trying to accomplish? How do we get there? And sometimes that may result in you run a willingness to pay study against all those problems and realize that people aren't willing to pay what you thought they were willing to pay or what they were for the value they get. And then that's when you need to start to really think about, okay, what is our offer? Where are we going? Nobody wants to reduce pricing, but sometimes a reduction in price can actually drive huge, boosts. So that's a really delicate situation. And there's lots of nuances. So those are just two ways I look at that.
Yeah. Well, I mean, it's good to know that it goes both ways. And so much of what you said, Bill, I agree with, because it all comes back to knowing your customers, knowing the problems they're trying to solve, and then, quantifying the value with them that your solutions are actually bringing, and having them answer the question, is it worth it?
100%. Your customers have all the answers. They really do. I talk to a lot of people and they want to go to market and do surveys in market, like with prospects. And I'm like, let's just talk to your customers. But people get a little scared because they're like, oh, I don't want to tip our hand. And I'm like, your customers want you to win. Nobody wants to pay more. Let's be honest. Nobody wants to pay more, right? But they do want you to win because they made a decision to buy your product, right? So they're invested.
Absolutely. Yeah.
Right? They don't want to make a bad choice, especially if it's a bigger deal. We brought this on board. It took 9 months to get it rolled out and get everybody going. We've got 1,000 people on it. My neck's on the line here. I want it to work. I want it to be right. And so talking to your customers in that regard about the product, about the value that they get, how they get value, who else they work with, all of those things just can only be good things for you, not bad things.
Yeah, that's tremendous advice. Let's not forget that in big B2B purchases, people's careers can take a hit, right? So they want to have a partner. They're probably willing to talk to you. Okay, Bill, as we move toward the end of the podcast, there are 2 questions that we ask every guest. And the first is April 2025 when we're recording this. So fast forward 5 years into the future, let's say it's 2030. What's a big shift coming for the B2B SaaS world, particularly pricing and structures that maybe not a lot of people are talking about right now?
Well, I think it's emerging. I think the pattern we're seeing now around hybrid's not going to go away. I think per user is going to become less and less important as AI gets better and better, because it is, like it or not, reducing the amount of headcount you need to get the job done. And so I think that's going to be a commonplace thing by then. We'll be talking about it like, oh, do you remember when, that kind of stuff. Like we talk about that now with like licenses. Remember when you had to buy software on CD, and install it? So I think that'll be a big shift. And I think we'll see a big split in the market around, I think things will still be recurring and subscription based at some level, but they're going to be tied more and more to outcomes, and possibly even as we get more and more into the agentic stuff, tied around actual jobs. Like a dream come true for me, right? Is that if we, not only are we pricing around jobs to be done, we're now pricing the job. And that's what we sell, is the equivalent of someone doing that work. And the only barrier between that today happening right away is trust. That's it. It's just trust. And our trust is building. Like my stance on it a year and a half ago, I started with, what's it called? Jasper, or one of those early AI tools. And I was amazed by what it could produce. And then ChatGPT came out and I was further amazed. And then enhancements. And I use it all the time. And I used to think it's like, yeah, it's a really great thought partner. And it is. And it's a really great way to get some things done fast. And it is. But I actually think we're at the point now where it's irresponsible not to use it. It's irresponsible in your job to not use these tools, because they demonstrably can make you faster. The trust is growing, right? And so that trust gap is going to get narrower and narrower and narrower, to the point where we're actually going to be able to start to claim the real value of what we deliver to those customers. And so I think that's the big shift.
Yeah, that's an excellent thought-provoking answer. I hadn't heard that before. I think you're right. Especially, it'll be intriguing to see how quickly that trust gap narrows, especially with larger companies.
Absolutely. Yeah.
Okay. And the final question is, Bill, if you could go back 5, 10, even 15 years and give career advice to your younger self, what would it be and why?
That's a great question. I think it would be just lean into being uncomfortable more. We take risks and we do something, we'll build something, right? This is exactly what happens to SaaS founders. We'll take a risk, we do a thing, we build it, we price it, for example, and then we get comfortable. But all the good things are on the other side of being uncomfortable. And so I think if I were to, go back to then, I would say just push harder, get more uncomfortable, lean into the things that scare you. And I think just in life in general, like, I've been in this industry since 1995, something like that. So it's been a long time. And there's nothing new under the sun, right? Everything just keeps changing. But what I wish I had done more was just lean into that uncomfortable spot to go even faster.
Excellent advice. All right, Bill. Well, thank you so much for joining us on the show. If people want to learn more about you, more about Pace Pricing, where should they go?
Yeah. So you can find me on pretty much any platform. I'm WDR Wilson pretty much everywhere I go. But Bill Wilson, Pace Pricing on LinkedIn. I do pricing page teardowns periodically, which are a lot of fun. And of course, pacepricing.com, where you can come and learn a little bit more about what we do, but also get some great resources and my thoughts on pricing.
Sounds good. Well, thanks again.
Thank you. It was a lot of fun.
You've been listening to the B2B Revenue Executive Experience. To ensure that you never miss an episode, subscribe to the show in iTunes or your favorite podcast player. Thank you so much for listening. Until next time.